722. Fall is upon us. Seasonality is changing. We made another 52-week high slightly on the Dow. FOMC meeting last week caused a lot of upside volatility, which we did. We reached 100% overbought. We're coming down on this Dow. We had quite a good sell down, about 185 points on Friday with the quadruple witch. The weekly, as we can see how it hit that fresh 52-week high of all calendar months. 61 years the Dow does not perform well, nor do any of the indexes in the calendar month of September. So the bull came roaring back from its last correction that we called in August. We've had one, we've had two, and now we're going to have number three. So on the weekly chart, the first support level is going to be 15,283 at the 10-week. The 20-week, which is this line slightly below it, is going to be 15,217.85. And we are going to go below this in the calendar going into the end of what's remaining in September and going into October. We have a debt ceiling that has to be addressed. We have the Obamacare. We have a potential government shutdown. There's lots of things that the bull has to worry about. We all know what happened in 1995. If you were living and trading the markets at that time, you can remember what happened. So this is a weekly level. Now on the monthly level, we went straight right up here, slightly make that 52-week high. This is the calendar month of September. What I can say is that on a monthly level, when we hit these absurdity overbought levels, we come down in corrections. The mentality to buy the first dip in this is not the right thing to do, because you're going into a major calendar earnings season. The quarter is going to be extremely weak. A lot of companies in the July quarter guided down. They're going to have to pay the piper on much lower margins across the board. The volatility is going to increase. So when we take a look once again at the 60-minute level on Friday, as soon as we hit that 15700 up here, kabam, it tanked. Right down here. This is a 60-minute view of what the Dow did on Friday. Okay. Now, there were three components that were added to the Dow. One was Nike, one was Goldman Sachs. The new three additions to the Dow is the following. Visa was added, Goldman Sachs was added, and Nike was added. Alcoa, Bank of America, and Hewlett-Packard came out of the Dow 30. Okay? One of the things that we can say is that the way that sold down from these extreme overbought levels is that's what happened on Friday. Once again, I'm just going to say on the weekly chart, this is what you can tell where the sellers were. And it was one day Friday only out of the 5-day period that we actually had the selling. On the daily, well, once again, my friends, we are gapping down here to test these daily simple moving average at 15,404. The 20-day simple moving average is 15,144. And then, of course, the 100-day moving average, the yellow line here, is the 100-day at 15,210. Okay? So what we're going to be looking at very carefully is what size is this correction number 3 of the calendar year going to be. I can tell everyone without a doubt that there will be no Thanksgiving or Christmas rally at these levels of absurd overbought levels that the bull has created. Whether it was created in a high frequency algorithmic model within the exchanges and just pumping these buys up and just going and going and going to the ceiling. Here's what happened with the last correction in August that we called for. And here's the other one back in May. We're working on number 3 here that's going to start. Volatility will increase in the Dow. There are bear funds that can be bought during these corrections. There always has to be corrections. And that buying the dip in the last one going into September is that counter selling from October, I mean from August. Now we have that counter selling that's going to come back in the month of October. Expect high volatility in the Dow.